Welcome to The Chemical Show, the podcast where chemical means business. I'm your host, Victoria Meyer, bringing you stories and insights from leaders driving innovation and growth across the chemical industry. Each week, we explore key trends, real-world challenges, and the strategies that make an impact. Let's get started. Welcome back to The Chemical Show, where leaders talk business. We have just wrapped up the second quarter earnings seasons, and it's no surprise that it's been mixed results depending on where in the industry you sit, etc. So today's podcast episode is really about bringing to you second quarter earnings insights and what it means for the industry and what it means for you as a leader as we lead through chemical industry transformation. So I'm going to be unpacking some of these insights and also tying it into the themes and advice that we've been discussing this year and talk about what you can and should be doing as you go through the second half of 2025 and into 2026. I know that we are in the midst of business planning, budgeting, not just finishing out the year, but really looking ahead to what next year will be and how you and your company and your business will be running, leading, growing, managing, navigating, all of those things. One of the things I really want to talk about as well as there is still time for you to attend the Chemical Summit. In fact, if you're going to do one thing to set yourself up for success for the coming year, it's attending the Chemical Summit. So it's being held on September 30th and October 1st in Houston, Texas. And it is a great opportunity for leaders, senior leaders, mid-level leaders, rising leaders, to engage and set the stage for 2026. Not just for your company, and that's super critical. And in fact, that's, I know, where a lot of the investment is when we think about what people are doing, where they're spending their money. It's on investing in the business, but it's also about investing in you as a leader in terms of the insights that you bring to the table, the connections that you are making with other leaders in the industry, and more. So the Chemical Summit goes beyond the typical industry conference, right? And it's the forum where leaders can go beyond this idea of we're already being strategic and test whether their actions are really moving the needle and how other leaders are doing that. So you get to do three things throughout this conference. And I think these are some of the three value points that you get to bring, that we bring to the table for you, which is number one, benchmarking. Compare how your approach is and your company's approach against peers who are already gaining traction. What are they doing? How are they tackling the opportunities and the obstacles in business today? Number two, it's the conversations and connections. I hear this over and over again from people that are there. These are amazing connections. And they're connections that are much deeper than what you're going to get at a typical conference because you're not just sitting and listening or going through a trade show booth, but you're actually conversing with peers in the room, leaders doing the same thing that you're doing. So great opportunity there. And then the third piece is really around being future focused. What are the tools and insights that will help you lead through the next shifts and the current shifts and the next shifts, whether they're AI and sustainability, geopolitics, supply chain, regionalization. We're going to be talking about that a little bit more. Setting yourself up for success before they hit the earnings, because we know the path that you're on manifests over the next 6, 12, 18 plus months. And so doing the right things and understanding how to tackle those things is critical. So if you're ready to set your leadership and your business on the right trajectory heading into 2026, join us at the Chemical Summit. You can visit thechemicalsummit.com to learn more. All right, hope to see you there. Now, let's talk about where we are. Just past mid-year, we've just wrapped up second quarter earnings season. There's probably a few companies still trickling in with results. By and large, no surprise to you, no surprise to me, mixed, right? So that's where I'm going to say is the theme of this is really mixed. And I think it depends on where in the industry you sit, whether you're a commodity player or a specialty player, whether you are heavily invested in certain markets or invested and anchored to certain markets, whether you're broader. So, what are we seeing? Commodity chemicals, petrochemicals, plastics, right? Overall, weak demand, oversupply, and a lot of pricing pressure. We've been seeing this. We've been hearing it. No surprise. Go listen to my recent episode with John Richardson, and we'll link to that in the show notes to talk about where some of this pressure is, particularly in the petrochemical and the polymers value chains around petrochemical oversupply, Chinese competition, et cetera. So we're seeing losses. We are seeing shutdowns, particularly across Europe. And that's looking at companies like Dow, BASF, LyondellBasell, right? So difficult business environment that they're taking some real focused efforts to resolve. So some of the key levers that we're seeing is around cost cutting, including cutting the dividends, which is always, by the way, guys, that's a big deal. When a company cuts its dividends, it's a big sign because companies don't like to cut dividends. Shutting down plants, restructuring, a lot of capital discipline. So that's really on this commodity space. When we look at specialty chemicals, it's actually a little bit brighter right now. Not everywhere. It depends on the market that you're in and the end use application, but generally more resilient performance. And, looking at companies like Clariant, which beat its expectations for the second quarter. Lanxess had weak volumes, but they're aggressively restructuring. ScienceCo Ingevity, which has made a lot of portfolio shifts over the past year or two, and they've had some great earnings that have come through. So I think it's around what we're seeing, especially when we look at the difference between commodity and specialty, is regionalization versus globalization. More resilient markets, right? I mean, that ultimately is the story for specialty a lot, is that you're getting value through differentiation as opposed to in some of these more commoditized markets where it's value through being an effective cost player, bigger is better, et cetera. Well, today, bigger is not better. But overall, I think what we're seeing and what I'm hearing as I go out and talk to leaders is this idea that specialties just are having more resilience, there's selective growth, not easy. Nobody is saying that 2025 is easy. I think those easy days are over. We're hoping they come again. Probably not in 2026, but going forward. Let me just break this down, though, a little bit more. That's kind of the high level in terms of the differentiation between specialty and commodity and the fact that we've got a mixed bag. Number one, what's coming through? Persistent weak demand and macroeconomic stress. I think if we just start talking about tariffs and the uncertainty that tariffs has brought, that is a certain play on macroeconomics. While we say we're not really in inflationary times, there's certainly some demand destruction. I think we've seen declines across that. And companies are warning of slower growth, whether it's BASF, Dow is making some shifts. Otherwise, if we look at Europe, Europe is under stress for a lot of the policies now. They've recently come through with some new statements and policies. I think some chemical companies might be saying it's a little too late, but we'll see. But consistently, what we're seeing as we look through earnings reports is this idea of weak demand and just macroeconomic stress. We are in a period of just disruption, and I think that's the best way to think about it. And that disruption is causing stress. The second theme that's coming through, and again, this is no surprise. We have been talking about this for over a year, and it's around this idea of operational excellence and cash focus. And so that is coming through, and that's paying dividends. For some people, cash is king, right? So I think what we're seeing is this bigger focus on cost discipline, operational excellence. Now, the downside of this is it is also manifesting in plant closures. It's manifesting in some layoffs, and certainly we saw, the latest I saw last week was CP Chem announcing some additional layoffs, which maybe is part of their overall 20% cut, which is, by the way, a big cut. But companies are really prioritizing this cash generation. Now, what that's not saying is that they're not investing. There is still continued investment, right? So investment in the right places, but absolutely a cash is king focus. Which, let's be honest, their investors would say, yes, please pay attention to the cash because your overall economic situation is not ideal. Again, for all these other reasons, macroeconomic stress, right? Disruption, some demand declines and oversupply. Certainly when we look at certain markets, petrochemical, plastics, et cetera, dramatic oversupply. And then when we look at, depending on what markets you feed into, right? So automotive is still struggling. It's on the struggle bus for a long time. And I don't know about you, I personally haven't bought a car in a while. I'm about ready to buy a new car. But I think that's one of the things when you just look around at where people spending their money, it's not necessarily on some of the things that certain markets would like. So maybe go buy a car and save the chemical industry or save parts of the chemical industry. I think there's the other pieces around this focus on strategic investment and long-term focus. I think one of the dangers in business planning at every level is the hockey stick, right? And you guys know the hockey stick, right? It's like, it's going to be stinky this year. It's not going to be great. We're going to be flat, flat, flat. And then all of a sudden, miracles are going to happen. And next year, 2 years from now, the market's going to pick up and it's going to be this skyrocketing market. I'm not seeing so much on the hockey sticks, and people aren't talking about that, but they're absolutely deferring the point of view that things are going to get better until 2026. We were hearing parts of the idea that, second half of 2025 is going to get better. I think we're just pushing that down the road, and that's something that is probably no surprise to you, but I think this whole idea that we're pushing that down the road. What does this mean? So, okay, I'm not going through the deep dive of all these earnings reports you guys have. I'm giving you some of the highlights. But what does it mean, and how do you need to be thinking about business today for the second half of 2025 and going into 2026? Number one, there's this whole idea of this global demand shifts, right? This reliance on China. We know this. We've been talking about this for a long time, that we've got some oversupply, we've got tariff exposure, we've got cheap Chinese imports, that even though we've got tariffs coming in play, and I think I sit in the US, obviously, so that's a bit of a US centric view, but it's applying globally. We've got regional hotspots and regional cold spots, I guess. From a strategic lens, though, I think where we're at is we need to be really thinking through additional market diversification, additional innovation pipelines. One of the things that's been really positive, and I think is a positive note, is we are seeing more innovation this year. People have said this. I'm hearing it pretty consistently when I talk to companies, is that they're seeing more innovation because things got put on pause for a little bit. Innovation can only be on pause for a very short while before it has really negative effects. So, because, when I stop innovating this year, the effects aren't felt for a couple of years. So we're in a bit of that. So I think what the positive news is that there's focus on innovation in the right places, whether it's building growth in adjacent markets, right? And figuring out how to apply your business and your products in those adjacent markets, that's becoming really critical, as well as defending the core businesses. So that's one lens. The second lens is around regionalization and really focusing in on supply chain. I'm going to say it again. The 2020s are the decade of the supply chain. We did not talk about supply chain nearly this much in any of the rest of my career. I mean, it's been there, right? It's always been important, but it's really about supply chain strategy, and I think a bit more regionalization. So I'm going to bring out Clariant as an example because they've talked about how while they're a global company, their business is actually less exposed to international supply chains. Something like 70% of their supply chain, their raw materials are coming in, they're local. So they're regional, whether it be Asia, North America, Europe. And so that provides some benefit from both a timing basis. If I just think about the length of time it costs to move product globally, the cost of moving product globally, some of the challenges that you may have. So you're facing and you define competition a little bit differently when you're focusing on local and regional markets versus when you're focusing on global markets. And so that has served them well. Westlake would be another one. I don't often talk about Westlake, but they're very US centric, and they're proud to be US centric, and that has served them well because they're in a market that has created resilience. And especially when you think about the global pressures that companies are facing, your company is facing, figuring out how to create the local infrastructure, some of the trade barriers that you can create. And you're not, we're not talking about anti-competitive behaviors, but just thinking about what are the things that you are doing to carve out and protect your business. Some of this is a regional footprint. Some of it's around the way that you structure your agreements. And of course, the thing we learned in 2020 is around being really clear about what that supply chain is, who you're relying on, where your products are coming from. Not being sole sourced, although I hear people kind of going back to some of their old ways of, I'm going to focus and working with, just one or two key suppliers or key partners. And that actually leaves you quite vulnerable, right? When there's disruption. So I think thinking about supply chain from a resilient perspective where your customers are located, where your suppliers and your business partners are located, becomes really critical. The third strategic theme that's really emerging from these insights, and again, I'm just going to say it's a platform that we've been focusing on this year, is around cost discipline, right? So thinking about cost discipline as an asset, not just an opportunity or a hindrance, right? And I think we sometimes say, oh, it's the slash and burn. Nobody wants the slash and burn when it comes to cost discipline. It's really around the right prioritization of where you're spending money to invest. So digital is one space. Although I'm going to be really honest, I had a conversation last week where people were saying, companies are a little bit sketch in terms of where they're seeing their digital investments. I think it's also this idea that, one size fits all, we're going to go in and go big, rather than getting back to the whole idea of let's pilot, let's get resilient, let's be fit for purpose in where we make our investments. So I think where we are today and the companies that are being most successful so far in 2025 and as we close out the year and head into 2026 is around being very mindful of where those investments are. I think we're going to see a lot less of these big investments, whether they're in assets, whether in digital, whether they're in innovations, and a lot more nimble innovations, nimble investments that pay results more quickly, that you can affect more quickly, get results more quickly, et cetera. So, and I think about this with the leaders that are framing cost discipline with investment discipline. And investment discipline not being don't spend, but spend the right way and being creative in how you're doing that. Those are the winners. And that's where we're going to see, and it ties in with this idea of continuing to innovate, because when you innovate today, it pays dividends tomorrow. Making the right investments today, because those investments today pay dividends tomorrow. So it is a bit of this long-term view, but you have to execute here in 2025 and going into 2026 the right way. The other piece we're seeing and kind of the theme, and again, this becomes a bit structural in your company, but this divergence between specialty and commodity, it has gotten more highlighted, right? So I think you would say perhaps that some of the specialty products or certain product lines that have been more resilient because they have more value built into it. They have tighter connections with their customers and creating customer-centric solutions. And they're things that customers really need. And so I think this is where we're seeing some of this divergence. And frankly, it's harder to replicate, right? So, I get back to this commodity specialty perspective. It's kind of easy to replicate polyethylene. Now, okay, folks, you polyethylene producers out there, don't hate on me. But there's been a lot of benefit and a lot of focus as companies start up, as they grow, as they think about what their product landscape is. I'm base loading, this commodity product. Great, there's value there. But it's also easy for others to replicate. Specialties, harder to replicate. So you don't have a specialty portfolio. What are you going to do? Think about the things that are in your control that are difficult to replicate. Some of this may be about your approach to talent. This may be your customer centricity. How do you approach your customers? How do you create value with your business partners, right? So I think there's a way of bringing in this specialty and diversification, even when you say, my products are vanilla. They're not very differentiated. And yet the way that you approach markets can be differentiated. And so I think that's what we're seeing as we focus in on that, particularly as you think about customer-centric solutions and things that are creating value for your value chain. And then investing through transformation, right? So I think this piece is, while there is cost control, this whole idea of business transformation, industry transformation takes long-term commitment. There is no doubt in my mind that we are at an inflection point in the industry. It may not be a momentary inflection point. It's an inflection point that's taken a couple of years, where our approach to business and how we're evolving is very different than where it was. So when you look at some of the learnings that we can get from this second quarter earnings reports, it's around this cutting where it's appropriate, but continuing to investing in talent, digitization, sustainable innovation. Sustainability, we don't talk a lot about sustainability, we do a little bit. And I sometimes characterize sustainability with the small s, do you have a sustainable business, versus sustainability with the big S. Are you focusing on kind of this glory days of sustainability, which when we think about where we were in 2020, it was kind of a hot spot, right? And now there's a focus on ESG investing. There was a focus on sustainable development. There was a lot of tax incentives. Those are slowly filtering away, maybe quickly filtering away, depending on your point of view. And yet, we're continuing to invest. There continues to be a business case for sustainability, and companies continue to focus there. They have to figure it out differently, figure it out perhaps without all the tax incentives that made it super appealing. And so it's going to be a slower, steadier approach. In fact, one of the panels that's at the Chemical Summit this year is the business case for sustainability, because there is still a case for sustainability, whether it has lost its shine and luster and just the super excitement. We're now in the hard work of it and getting real. And that's part of the evolution of how the industry has evolved. So those are the kind of the 5 themes that are going through this, right? So I think lessons, when we think about lessons for you guys, what's your takeaway? Number 1, balancing today versus tomorrow, right? So doing the right things in your business today that allow you to reinvest, grow, focus on future business. The second piece is this whole aspect of designing resilient supply chains. I know that you think you've already done the work, right? So here's this, you're like, Victoria, we have done this work already. Yes, you have. And you're going to have to do it again. And you're going to have to do it again, because situations keep evolving and changing. And 2020 is the decade of the supply chain for a reason. You need to continue investing and focusing and refining and creating those resilient supply chains. And the whole aspect of resilient is it's not one and done. It's ongoing. So I think that's really critical. The third piece is really this focus on talent. So we didn't talk a lot about this, and yet talent kind of definitely weaves through, right? Because the companies are not delivering these results without their people. We're in an evolutionary point of view when it comes to talent across the industry, right? And we're seeing people laying off, right? And I referenced CB Chem earlier. There's others that are cutting staff, and yet you still have to continue to have the right talent, grow talent, and bring talent in. So I think this complexity that comes through is really critical. And I'm just going to say at the end of the day, a lot of this falls into communications, right? Tell your story, communicate clearly inside your company, outside your company, with your employees, with your other stakeholders. Because as we're going through these changes, and I've seen this, and I'm sure you have seen this as well, people sometimes are living on yesterday's assumptions, and yet today it's changed. So getting crystal clear on how you're navigating, what your direction is, communicating that clearly to your stakeholders inside your company and outside of your company is really critical. That's my quick summary of kind of what we can take away from mid-year earnings reports, focusing in on 26, but don't forget 2025. I actually look at this and I say, we have 5 months left. There's a lot of amazing things, amazing business that can happen this year. If you're ready, if you're primed, if you're ready to take advantage of that. And when I talk to companies, they're like, they are winning business because they're ready, and they're losing business because they're not ready. So getting your whole system, your people, your teams aligned to be ready to take available of opportunities is more critical than ever. So that's it for today. I talked about this earlier in this podcast episode. I'm going to wrap it up as well. Love to see you guys at the Chemical Summit in 25. It's September 30th and October 1st in Houston, Texas. You are going to hear from a number of great guests that have been featured on the Chemical Show, as well as people across the chemical community in the audience, engaging, growing, focusing on business and focusing on business and strategic insights, and boosting your business opportunities for 2026. Be there. And thank you for listening today. Keep following, keep sharing, and we'll talk to you soon. Thanks for joining us today on The Chemical Show. If you enjoyed this episode, be sure to subscribe, leave a review, and most importantly, share it with your friends and colleagues. For more insights, visit thechemicalshow.com and connect with us on LinkedIn. You can find me at Victoria King Meyer on LinkedIn, and you can also find us at The Chemical Show Podcast. Join us next time for more conversations and strategies shaping the future of the industry. We'll see you soon.